Many of the investors, let's say they're from Europe or from Japan or wherever they might be, China, they give you money, but they have their local currency and then it goes into dollars. Do you have many of your investors saying, I'm worried about the dollar's value, or people don't care about that so much?
Well, oftentimes our clients outside the U.S. Are either hedging or they're willing to take the exposure to the dollar. Coming into this year, our belief was that the dollar was somewhat overvalued, maybe 10–15%. So the weakness that we've seen in the dollar is actually a welcome. And of course, makes the U.S. better as an exporter, reduces the deficit. I think with yesterday's news, it's likely to result in a slightly more weakening of the dollar, just given the impact on the overall economy.
So if you're managing $5 trillion, you obviously have some impact on the investment world and know what's going on. Suppose Jay Powell called you up and said, I'm weighing whether I should increase or decrease interest rates or keep them the same. What would you tell him?
Look, our view, we would like to see the Fed start rate cuts in June. And so we're calling for 3 rate cuts in the back half of this year. And it's primarily because of the weakening of the economy. And even if inflation were to go up, I don't think it'll go up as much as the worst case scenario. Both are still lower. And the risk is that the Fed either doesn't have enough data or enough confidence or enough visibility. If they are too restrictive, it could further weaken the economy.